This is CA Akshatha Udupa. I welcome you all to my session on price action, which is the most important and the most spoken about topic in the stock market. First of all, let's understand what is price action. Price action is the movement of price over a period of time. So let's understand what is this price action all about, what is this analysis all about, and how do we use this price action in reading the charts. So what is this analysis all about? Price action analysis is a technical analysis of movement of securities price plotted over time. Technical analysis is nothing but analysis of the charts or the movement of the stock in the past and predicting what can be its movement in the near future. So it is technical analysis of the movement of price of the stock or index plotted over a period of time. Now, this price action analysis we use in all type of stocks for all indices, but we don't use this for trading in options. You cannot directly apply this price action analysis on option, but you can apply this price action on the stocks or index, and then based on this you can go for buying or selling of call or put in options, but directly you cannot apply this price action on options because options are mainly based upon Greeks. So analysis of Greeks becomes more important than anything else. So before going deeper into price action, it's very important to know few terms. The important thing is swing. Now what is a swing? Swing is nothing but the language of market. Let's say I have to travel from place A to place B and I opted to travel by my car. Now, how will I travel? It's really difficult to cover this distance. Say this distance is 300 kilometers. It is very difficult to cover this distance in one go. So what I'll do, I'll travel a little bit, then I'll take a small break, then again I will travel and take a small break, right? So when I travel, what can I say, my graph will go up, again I'll take a rest, so graph will come down, again the movement starts. So this movement is nothing but swings. Similarly in the stocks we have the stock moving up, again taking some rest, that is coming down, again it will move up. So these type of movements is called swings. So basically when we read the chart, we should be able to read the sentiments of the market. For this we use swings as the base. So swings are nothing but the language of the market. The person who masters to read the swings will be an effective trader. So the next thing, in price action, the important thing which you have to understand is identification of trend. How will you identify whether a stock is doing upward trend or downward trend, or is it sideways? Then only you can make your proper entry and then only you can make effective trade. So how will you identify the trend? First thing is uptrend. So if you are looking for buying opportunity, then you have to check whether the stock is doing uptrend. So when can you confirm or when can you know that the stock is making uptrend? When you get these type of pattern, okay, then you can say that that stock is doing uptrend. What is it pattern? First there has to be a low, okay, and this low which you mark should start with the green candle because we are looking for buying opportunity. Uptrend means a bullish movement, so your candle should start with green. So low, then you should get a high, okay, then higher low, then higher high. So uptrend should have higher high and higher low, and the candle should start with green. Then only you can say that a stock or index is doing uptrend. Okay. Similarly, if you are looking for selling opportunity, then you have to make sure that the stock which you have selected or the index is doing downtrend. Okay, so for doing downtrend, your starting point, that is a high point that you select, should be a red candle. So the first high and then a low, then it should create a lower high and then lower low. The pattern looks something like this. So only if you find such patterns, then you can say that that stock or index is doing downtrend. So for uptrend, you should have higher high plus higher low. For downtrend, the stock or index should make lower high plus lower low. Okay. So before moving to the strategies, let's just look at some examples. Now let's check uptrend and downtrend in this Nifty Bank chart. Okay, if we get pattern like this, then we'll have low, high, higher low and higher high. So it will be uptrend. If we get a chart, if we get a pattern like this, then it is high, low, lower high, lower low, which is downtrend. So let's go on checking this. See here, this is high, this is low, this is lower high, this is lower low, again we have lower high, lower low. So this is downtrend. Then we got a breakout here, so somewhere here we'll get the entry for trade. Now how to find out this breakout, how to identify the entry point, all these things we will discuss in the later part in this session only. So now let's concentrate only on the trend patterns. So this is a downtrend. Since we always for downtrend you have to check from above, and it has to, the candles has to come in a sequence below. See, again you can get a clear picture over here. See, high, low, lower high, lower low, again lower high, lower low, then you got the breakout. See, this is a clear downtrend. Moving forward, if you go on analyzing this, do practice this a lot. You can use different stocks, different charts, and then you can just analyze this type of trend, because this is very important. Whatever strategy you apply under price action, this is an important thing which you have to note. So practice this a lot. Take out different charts and practice identifying the trends. See here, you have low, high, higher low, higher high, again higher low, higher high, again higher low, higher high. So this is a clear example of uptrend. Like this, just go on analyzing. See, everywhere you will get, if you clearly, you should be in a position to identify this. So identifying the high and low points is very important. See, here again you have low, high, higher low, higher high, and this is a breakout actually. I'll clearly explain how to do this breakout, trend lines, touches and all this going forward. Let's move further. See, sometimes you will not get all these higher high, higher low, lower high, lower lows. That is when it becomes range bound. When Bank Nifty or any stock for that matter becomes range bound, you will not get downtrend or uptrend. So in such case, it is better to avoid trading, because however entry you take, the chances of getting stop loss hit is more. So when the stock or index is range bound, it is better to avoid. Here you can see no, neither uptrend nor downtrend is formed. See here again, low, high, higher low, higher high, again higher low, higher high. So uptrend is formed here. Again it become range bound. Then again, see, all the stocks will not do a rally at a time for a very long time. For some time it will do rally, and that is where you have to catch that particular stock and do the trade and exit, because after some time again the stock will become range bound. It will not just do a rally continuously. After a certain point it will take a pause, it will become range bound, then again it will start its rally. So you have to identify when a stock or an index is range bound, when a stock or an index is doing its rally. So when it does it rally, you have to find out is it an uptrend or downtrend and take the trade accordingly. Here see, again we have low, high, higher low, higher high, again higher low, higher high. It is a clear uptrend. See here again low, high, higher low, higher high. This homework you have to do a lot so that it will help you in any strategy you adopt. Here again we have high, low, lower high, lower low. That is the downtrend. So this is how you find the trends. Now let's just also check this for stock. See, in this stock, if you check Wipro, see here you will get low, high, higher low, higher high. So this is your breakout. Then here if you check high, low, lower high, lower low, and around this will be your breakout. Now again how to enter, I'll just tell you later in the later part. So see here, this will be the breakout. Let's check some more. See here it's range bound. We don't get any trend confirmations here. See here again we have high, low, lower high, lower low. So it is downtrend. Again here you can see we have low, high, higher low, higher high, and then we have a breakout. Let's check. Similarly, you can check for any stock for that matter. Let's check one more. Here see low, high, higher low, higher high, again higher low, higher high, higher low, higher high. So it is uptrend, confirmed. Then see here we have high, low, lower high, lower low, lower high, lower low. So it is downtrend confirm. So similarly, if you go on checking, you take up any stock and do this practice so that it will help you a lot in any strategy that you adopt. Next, let's look into strategies. Okay, I have two good strategies over here, two effective strategies. If you implement it under the proper setup by following the same rule which I have given here, then you can definitely make something good out of it. So the first strategy is, let's take it for the buying opportunity. If you are looking for buying opportunity, then as per this strategy, there should be uptrend, okay, plus there should be support, plus there should be trend reversal pattern. Now let's break down this into three parts and see one by one. So for buying opportunity, first of all, there should be a bullish trend or a uptrend. So when will you confirm it is a uptrend? Only when you get a low, a high, then higher low, then higher high. Okay, after that another higher low is to be formed. Then this is uptrend. Now the next important thing which should be there is support. That is, you have to draw a trend line like this. Okay, and this trend line has to touch all these 3 points. There has to be touches in all these 3 points, that is support, support, support. You call this trend line as support line. Only if there are touches in these 3 places, then you can say that it is a proper support. So uptrend is there, support is there. Now what is the third thing required? That is trend reversal. Now where this trend reversal should be there? This trend reversal pattern is to be present at this point. Let's say this has 1, low as 1, then 1, 2, 3, 4 and 5. In this 5th point, there should be trend reversal pattern. You can see here, see, at this point, trend reversal pattern is to be present. Then only you can apply this strategy 1. Now what are trend reversal patterns? The first trend reversal pattern is bullish engulfing. All must be knowing this. This is one of the popularly used pattern. Bullish engulfing, that is one red candle and then a bigger green candle which will break the open and close of the red candle. Okay, so this pattern is to be present, to be called as bullish engulfing. So if this pattern is present, then your entry will be just above the high of this green candle, keeping a buffer of 0.20. It is always advisable to keep a buffer of 0.20 if you are working under small time frames. And your stop loss will be just below the low of this green candle. So if this pattern is formed, then you can apply the strategy by entering here, that is above this high of this candle, and stop loss just below the low of this green candle. Now the next trend reversal pattern is bullish harami. That is, you will have one red candle, big red candle, and a green candle which is inside this red candle. Okay, that is inside bar. Okay, inside bar or baby bar, what we call. This is a mother bar, this is a baby bar. So this green candle should be inside this red candle. Then your entry will be just above the high of this candle, and stop loss will be just below the low of this previous candle. Okay, this red candle. So the next pattern is bullish pin bar pattern. Now what is this pin bar? Pin bar is this big longest wick that you can find here, a very long wick. This is called pin bar. So in that we have 2 types: closed within inside bar. Okay, that is, you'll have one red candle, you have another green candle over here. The next red candle that is formed has to close inside this green bar itself. So what does this actually mean? See, here buyers have taken charge. Here sellers are trying to bring it down, bring the price down, but buyers are not letting it happen. There is a strong push from the buyer's side, and there is a strong try from the buyer's side to take the charge. So this candle with a longest wick will signify that buyers are very strong. So you can consider this as a bullish trend, and you can go for buying the stock. So your entry will be here above the high of this candle, and stop loss will be below the low of this pin bar candle. Similarly, this pattern will also work in the same way, but see, you have 2 red candles, then you have a good green candle again with a pin, that is with a long wick. Okay, here again, see, it has to close. Even if it closes above the red candle, that's fine. Okay, it is closed above the inside bar high. You can see here the high of this candle is here, right? This is the high of this red candle. So green candle closed above the high of this candle. Now in case green candle, this low of this green candle is below the low of this red candle, then you cannot consider this pattern as bullish reversal pattern. Okay, see, the close, this green candle, it has closed above the inside bar high. right, above the red candle high. So this can be considered as a bullish pin bar pattern, that is a reversal pattern. But if the low of this green candle is below the low of this red candle, then you cannot consider that candle as a bullish pin bar pattern. Okay, so only these two cases you can consider, but make note of it that in both these cases the wick, the longest wick should be here below, not above. If it is above, then it will be bearish pin bar pattern. So if the wick is below here, it is long, then you can consider it as bullish pin bar patterns. So the next pattern, next reversal pattern is piercing pattern. Okay, here you have a red candle, big red candle, then you have a small green candle. So you can see here that this green candle, it can be a doji also. Most probably it will be a doji. If it is doji, then it is a very good confirmation that buyers are taking power. So a green candle, big green candle, after that if a doji is formed, then your entry will be just above the high of this doji, and exit will be just, that is stop loss will be just below this doji. Okay, low of this candle will be a stop loss. Now this here what you are doing is you are not waiting for the third candle to form. Your entry will be directly at the second candle. Just improvisation of this pattern is morning star. What you are doing is, since a small doji is formed here, you just don't want to take the risk. You will wait for another green candle to form. Once this third candle is formed and that candle is green, your entry will be just above the high of this candle. Okay, and your stop loss will be here in the low of this doji. Low of this doji, below the low of this doji will be the stop loss, and above the high of this green candle will be the entry. Now many of you might ask, should we enter before the candle closes or after the candle closes? Now your entry will be just after the close of this candle, and your entry has to trigger in the next or in the next two candles. It is always good if the entry is triggered in the immediate next candle. If not, you can wait for another one candle. Okay, if in the next two candles your entry is not triggered, it's always better to exit. Next, let's move on to the selling side. That is, if you are looking for selling opportunity, then the three conditions that is required to be met is the downtrend, plus there has to be a resistance, then there has to be similar to the buying opportunity. Here also trend reversal pattern should be there. Downtrend means what? There has to be high, low, lower high, lower low, and then again lower high. And this trend line that you draw is a resistance line, and there has to be touches in all 3 points. Then only you can say that there is a proper resistance. Now you can apply strategy 1 if trend reversal pattern exists at this point. Okay, that is 1, 2, 3, 4, 5. At this 5th point there should be reversal pattern present. Then only you can take the entry as per strategy 1. So what are the reversal patterns? Similar to bullish engulfing pattern, this is bearish engulfing pattern, wherein you will have first a small green candle and then a very good candle with a proper body, a red candle. So your entry is just below the low of this red candle, and your stop loss is just above the high of this candle. Next, it is bearish harami. Okay, similar to bullish harami. Here you will have a big green candle, then you will have a red candle which is inside this green candle. That is, the open and close should be inside this green candle. Even the wick should not cross this candle. Then only you can call it as a bearish harami. So here your entry point is just below the low of this red candle, and your stop loss is just above the high of this green candle. Next, it is bearish pin bar pattern. As I already told, the pin bar over here, this pin or the wick, longest wick should be above. Okay, in the bullish pin bar pattern, we observed that the longest wick was here below because their buyers were putting pressure, and here sellers are the ones who is putting pressure on this. So the longest wick should be in the top. Okay, here again closed within inside bar, that is this is closed within the previous candle, you can see here. So this is one of the patterns. The other pattern is closed above the inside bar. Okay, here this is a red candle and this green candle closed above this red candle, but the wick is long in the upper side, which means sellers are putting pressure, sellers are trying to take control over buyers. So sellers are strong, so chances of bearish movement is more. So these are the reversal patterns with regard to pin bar. So the next reversal pattern is dark cloud cover, that is you will have a big green candle and then a red doji. So your entry will be just below the low of this candle and the stop loss will be just above the high of this candle. Similarly, next pattern is evening star, that is just improvisation of this pattern, that is you don't want to take the risk, so you will wait for another red candle to form, okay, because you don't want to trust this doji. So you will wait, and when this red candle is formed, you can make an entry just below the low of this candle and your stop loss can be just above the high of this doji. So these are the different reversal patterns. Now here you can see, as I already told, bearish pin bar pattern. So this pattern is usually found in the patterns like double top or double bottom, or wherever you find this resistance lines and support lines, the chances of these type of patterns coming in is more. So you can just check out my YouTube video wherein I have described some strategies regarding pivot and camarilla and all these things. So in these strategies, when you apply these indicators, you will get some support lines and some resistance line. So these type of patterns usually are formed in such places, that is wherein the support line or horizontal line is formed. Other than that, in double top, double bottom patterns, you can find these patterns. Now this strategy, whatever I have explained, if you go on searching in the charts, you can find it very rarely. Okay, this applying strategy 1 is little difficult because you will not find such reversal patterns usually. So the next strategy which we are right now will be dealing, that is with strategy 2. Okay, this is a most frequently used strategy, that is you will find this setup every now and then in almost all the stocks and indexes, provided you do your stock selection properly. You have to look for trendy stock and there you can usually find such setups. So having said this, I also recommend, if you are going for long term, you have to go by strategy 1 because that gives better result. That is, if your time frame is 2 hours or more than that, then you can get the patterns which I used in strategy 1. If you're going for intraday, you will get a lot of setups under which we can work for strategy 2. So for intraday, it's better to follow strategy 2, and if you're going for long term, go for strategy 1. So let's see what is a strategy 2 and what is a setup, how do we work under the setup. So this strategy 2 can be applied to stock, it can be applied to commodities, it can be applied to index, it can be applied anywhere except for options. So if you are looking for a buying opportunity, then 3 conditions are to be met, that is uptrend, breakout with touches and volume. Okay, so for uptrend, as I already told, there has to be low, high, higher low and higher high. Then there has to be a proper breakout. What is this breakout? See, in the previous strategy we saw we had a low, high, higher low, higher high and immediate another higher low, right? Here what happens is stock will move like this, and after that, instead of giving a move like this, okay, downside, it will just move a little bit of sideways. In such cases, you cannot get support at 3 points. If you draw a trend line like this, you cannot get support in all these 3 points. That's why you are drawing a breakout trend line over here. Okay, Here you are drawing the trend line, and there has to be a proper breakout with the touches. What are these touches? That is a trend line that you draw, okay, should be touched by at least 3 candles at 3 different points. Okay, now if we have 3 touches together here and we don't have any touches in this upper part, then this is not a valid setup. Okay, so you should have minimum 3 touches at 3 different points, and then there should be a breakout like this. This is how the pattern looks. Okay, and this breakout candle should always be green in color. And another condition that is to be met is volume confirmation. That is, a candle in which you are making the entry should have the volume more than the volume of the previous candle. Okay, you can see here, if you on the indicator there, volume indicator, the volume will also come in the chart. Okay, if you observe. So the breakout candle should also have adequate volume, that is a volume which is more than the volume of the previous candle. Then only you can apply this strategy. Now, where will be your entry? Just above the high of this candle. Stop loss will be just below the low of this candle, and your target will be previous swing high. Okay, this is a previous swing here, right? So the high of this previous swing will be the target. Again, it's preferable to keep 0.2 buffer, that is, you can keep a little below this previous swing so as to take a safer place. So this is how the strategy 2 works, and this setup you will be available very frequently. You can get this setup very frequently and you can work on it. Now, if you are looking for selling opportunity, then there has to be a proper downtrend, plus there has to be a proper breakdown with touches, and there has to be a volume confirmation. Now, downtrend means high, low, lower high, lower low, right? You are drawing a trend line like this. Again, there has to be 3 touches. Okay, minimum three touches should be there, and a breakout should be there. Here you can see there are 3 touches. Here it has come very early, I mean in this example, so these touches are fine. Now if I draw a trend line little more, if I don't get the breakout here, then you have to see that the touches should be far in 3 different positions. Okay, so this is a breakdown candle. So this breakdown candle should also have adequate volume. So this breakdown should also have required volume, that is, the volume of this candle should be more than the volume of the previous candle. Then your entry will be just below the low of this candle, your stop loss will be just above the high of this candle, and target will be previous swing low. So this is a previous swing low, just keep a buffer of 0.2 and keep the target. So this is the setup for the selling or the bearish trend. Now, what are the points to remember under this? For strategy 1, you should make a note that the swing size should not be very different. Okay, when you go for strategy 1, the swing sizes should be the same or at least nearer. Okay, you cannot take one small swing and one large swing and apply the strategy 1. It will not work. That is, if you see, swing should be something like this. Okay, this is fine. Now if the swing is something, one swing is like this, the another one is like this, then this strategy will not work. So it has to be something similar. Okay, not something too different sizes. So that is the first thing which is to be noted. So the next thing is random reversals not to be considered. What do you mean by this? If we go back to this slide, see here, if you get reversal somewhere, if you get a trend reversal pattern, that is either a bearish engulfing pattern or a bearish harami pattern, you cannot just blindly apply strategy 1. You have to check whether these two things preceding the trend reversal pattern, these two conditions are met or not. That is, there has to be, if you are looking for selling pattern, there has to be a downtrend, there has to be proper resistance. Then only if a trend reversal is formed at this 5th point, then you can apply the strategy. Just a random reversal cannot be considered for applying this strategy. Then volume confirmation is not necessary for your strategy 1. Volume confirmation is required only for strategy 2. Now, if you are going for strategy 2, then what are the points which are to be kept in mind? First, as I told, minimum 3 touches in different levels should be there. Then swing size is not relevant here, like we discussed in strategy 1. Here swing size is not important. Then gap up, gap down open candle is not a proper breakout or breakdown candle. That is, if you see here in this setup, see, if you're looking for buying opportunity and these candles are formed, and if this breakout candle is formed somewhere here, okay, instead of here, if this candle is formed somewhere here, then you cannot consider applying this strategy. The gap up or the gap down should not be considered for this strategy. It is not a proper breakout. It's a false breakout or breakdown. So breakout candle should always be green and breakdown candle should always be red. Okay, now if all these, see in this case, if all these conditions are met, that is, there is a downtrend, there is a proper volume, but if this breakdown candle is green in color, then you cannot apply this strategy, because for downtrend, that is, for if you're looking for a bearish move, if you are looking for an opportunity for selling, then your breakdown candle should be red in color. Similarly, if it is a breakout candle, then it should always be green in color. Next, don't trade on steep retracement or horizontal breakouts. That is, steep retracement in the sense you cannot have a very steep like this trend line. Okay, the trend line that you have to draw should be like this. It should not be just a line over here, vertical line, or it cannot go just like this. A horizontal line cannot be the trend line for this strategy. Next, let's see what should be the time frame. Okay, now we can trade at any time frame depending upon your strategy, however you apply. But if you are trading in a smaller time frame, that is 1 minute, 2 minute, 3 minute, 4 minute and 5 minutes, the previous day's data should not be considered for analysis. Okay, only if you are trading for more than 1 hour, then you can consider previous day's data also, while calculating the trend or while looking for the breakouts and breakdowns. But if you're going for smaller time frames, then previous data should not be considered. Okay. For trend marking also, previous data not to be considered in smaller time frames. Then always you have to keep a buffer of 0.20 when you are working under shorter time frames. Say for example, if you are working under 1 hour or 30 minutes time frame, even for 30 minutes time frame you can consider previous data. So before 30 minutes you cannot consider previous day's data, but after 30 minutes or after 30 minutes you can consider previous day's data. Say yesterday the stock made something like this, okay, something like this, and stopped there. The day closed over here. Okay, now today again it came like this. So now this can be your support. Okay, that is, you can use this data. Or if the stock moved like this on a previous day, okay, and closed over here, then next day it moved like this, you can draw this and check the breakdown. So for longer time frames you can use the previous data. For shorter time frames you cannot use the previous day's data. See here, this is low, this is high, this is higher low, this is higher high. Now if we draw the trend line from here, we have support. So this we have to find what type of pattern is this. You can see mother baby candle pattern is formed. There is a red candle, okay, and there is another green candle which didn't break this red candle's high or low. So this is mother baby candle. Now our entry is just above this green candle, right? Now our stop loss will be just below this red candle, that is previous candle. Again it's always better to keep a buffer, a small buffer. Then our target is previous swing high. Now where is that? See here we get this target. So we can keep this. Now while setting target also, it is always preferable to just keep a buffer of around 0.2 or 0.4. So somewhere here we'll keep to be on the safer side, because the chances are candle come near this and rebound. So it's always better to keep a buffer so that we'll be on a safer side. Let us check out some examples for strategy 2. You will get this setup almost every day. Very frequently you will get it. It may be in the index or in the stocks. Strategy 1 is very difficult to find. It's very rarely found, but strategy 2 you can find very frequently. It's always better to practice a lot, because reading the chart is not that easy. Once you practice it, then you can find these patterns very easily. The important thing which you have to also note is the stock selection, because you will only get good entries when your stock selection process is right. You have another video over here, I have given it, that is the stock selection process. Please do check it out. If you check a good stock, if you look for a good opportunity in a good stock, then obviously you will end up getting good trades. And in this case, especially the price action, the loss that you make in case of stop loss getting hit is very less. That is, the amount of loss that will occur is less, and the profits that you make is tremendous in this case, provided you apply it properly. That is, you should be able to clearly read the chart, know the trend, and then take the trade. Now if you go for VWAP or exponential moving average or pivot or any other indicators, there getting that confirmation or getting the proper entry is difficult. You will have to search for the setup a lot, but there is no stock market without price action. So if you know how to read the chart, if you understand the concept of price action, then if you select the proper stock, you can easily come up with good trades. You will get a lot of opportunities using this price action, and that too, strategy 2 is very frequently found. The only thing that is required is knowing to read the chart, knowing to identify the trend which is formed there. Is it an uptrend, downtrend, and just marking those breakdowns and breakouts. If you could identify this, then you can make a tremendous career in this stock market. So let's check out this example. You can see here, this is high, then low, then lower high, then lower low is formed. So here downtrend is confirmed, and this is the trend line to check the breakdown. You can see here there are adequate touches. If you start from here and draw the trend line, you can see this candle breaks this trend line. So this is a proper breakdown candle, and you have adequate touches here. Now once you got this confirmation, you have to check for the volume. There has to be adequate volume. That is, the volume of this particular candle should be more than the volume of the previous candle. Now here the color of the candle doesn't matter. The only thing that you have to say is the volume of the candle. Breakdown candle should be red, but previous candle can be red or green. But the volume of this red candle should be more than the volume of the previous candle. So here you have adequate volume also. You can see the stock after that moved in the downward direction. Here your entry will be just below this candle. Stop loss will be just above the high of this candle. Now what will be your target? You can either go for checking out the previous swing low, or based on your RR you can keep the target. RR of 1:2 is always preferable. Let's check out another example. Here you can see this is high, this is low, this is lower high, this is lower low, then this is a breakdown. You can see you should go on joining these lines. You have to wait until the candle breaks this correct line, and you should have at least 3 touches. After that, if you get a breakdown, then that is a proper confirmation. You can see the volume is also there in this candle. So the entry will be below this candle low, and the stop loss will be above the high of this candle. Your target can be previous swing low or 1:2 RR. You can see immediately the stock started falling, and here more than 1:2 target is met. The next example here, if you check, this is again high, low, lower high, lower low. So downtrend is confirmed over here. Then this is a trend line. Here you can see, here there is one breakdown, but this is again a green candle, so you cannot consider that. Again you have to wait to see if there is some other good confirmations. You can see here again stock started moving upwards, that is there was a retracement. Then you can see again you got a proper breakdown. So from here stock went in the downward direction. So had you took this trade, then your stop loss would have hit, right? Because this did not break the trend line properly. So you had to wait until there is a proper breakdown. So just wick touching is not considered to be the proper breakdown. The whole body of the candle should break this trend line, then only it is a proper breakdown. So here you can see this candle gave you a proper breakdown along with the volume confirmation. So this can be your entry candle, below this candle will be the entry, and above this candle's high will be the stop loss. Keep a RR of 1:2. You can see the stock after that started moving down. Let's check few more examples for uptrend. You can see here low, high, higher low, higher high, again higher low, higher high, and here is a breakout. Here you can observe, now if you are a beginner, it's difficult to catch this move. Now here there was a very steep down here. Just in 3 candles it made higher low, if you can observe. So if you are not able to read the chart properly, then you will miss out on this. You will just consider this as low, this as high. Again you will not be able to find another higher low, and you will miss this whole opportunity over here. So reading these becomes very important, and this will come by practice. By reading more and more charts, you will able to find these breakouts. Just looking at the live trades and just confirming that okay, he made that much profits, he made this much profits will not give you anything. All that will help you is just learning the previous charts, because again in the case of price action, wherever you go, however back test you do, everywhere price action will be there, it will be present. So you have to try to get as much as knowledge as possible by doing the back test. You have to read the charts a lot until the moment you see the chart, you should be able to make out the breakouts. Then only you can be quick enough to take the trade. So here if you observe, this is a breakout candle with good touches and with good volume. Your entry will be above this candle, stop loss will be below the low of this candle. Again your target can be previous swing high. You can go on checking for the previous swing high, or you can keep a RR of 1:2. Now if you want to play very safer, then you can just exit half quantity when 1:1 RR is met, and then you can go on trailing the stop loss, or you can exit half quantity as at 1:1 RR and another half quantity when 1:2 RR is met. Let's check out another example. See here, this is low, this is high, this is higher low, this is higher high, and here is a breakout actually. But if you see, there is no volume over here. If you say I got a breakout, and if you take the trade over here, high of this, then here this candle came down again, so your stop loss would have hit. So you have to clearly check for the volume. You cannot miss out any one condition given over here. So though you get a proper breakout, you have to check for the volume and then take the trade. Inadequate volume in the sense, the volume of this particular candle, breakout candle, is less than the volume of the previous candle, so you will not take this trade. Again you can just wait to get the proper breakout, but again here higher low is formed, right? So after this higher low is formed, you got a breakout over here. So this candle gave you a proper breakout with adequate volume. Here another thing you can observe, the volume of this breakout candle and the previous candle is almost same, but that is okay. You can consider if you are playing very safe, then you can ignore this trade, but this many a times this will also work. That is, if the volume is same, you can go for trading. So in this case you can enter above this candle, and your stop loss will be just below the low of this candle, and RR target based on your RR. This is a trend line which is called the resistance line. You can see constantly the stock is coming to somewhere this level and then reversing. Here again it touched this line and reversed, again a touch and reversed. When these type of movements are found, here also you can check for price action. If you see here, low, high, higher low, higher high is formed. Here you can check for the breakout. Now if you see, there is no breakout here because here again the candle touched this point and came down. So here you can wait for the candle to break this resistance line, and there if you find a price action, then you can take an entry. This is another strategy actually, but again price action only, you are applying the strategy 2 only, but you are also considering this resistance line to make sure that if this resistance level is broken, then the chances of stock moving in the upward direction is more. So here you will apply the price action and then take the trade. Now here if you find a down, now it is moving in the upward direction. You can see here low, high, higher low, higher high. Now check for the breakout. If you get a proper breakout over here, then take the trade. Again here if you check high, low, lower high, lower low, that is downtrend confirm. Check for the breakdown. Here you got a breakdown with very good volume. So you can just short below the low of this candle. Stop loss will be above this candle. You can take a previous swing low as a target, or you can keep a 1:2 target, or you can go on trading the stop loss. See, in such cases trailing of stop loss will give a very good result. You can go candle wise trailing, or you can go swing wise trailing. I suggest trailing the stop loss because in these strategies, trailing of stop loss will give you very good results, because the profit that you can make using this strategy is more. So you can go on trailing the swing lows for getting the good results. You can see another example over here. Here it is high, low, lower high, lower low, and this is a breakdown candle over here. You can see here you didn't get any breakdown. You just have to go on joining the candles, and this is not a proper breakdown. You just cannot move this trend line over the candles. The trend line has to just go on touching the candles, and once the candle break this trend line, that will be the breakdown candle. So here this is a breakdown candle with adequate volume. So your entry can be below this candle and the stop loss just above the high of this candle, and target based on your RR ratio or previous swing low. Also make sure that in some cases like this, say when you draw this line, if the body of the candle is touched, lower body, then that is fine, but you cannot just completely draw this line in between these candles. Let's check out another example. Here it is high, low, lower high, lower low. Again lower high, lower low, because here you didn't get a proper breakdown. Another swing is formed. So after that, once downtrend is confirmed, you can check for the breakdown. Here also you can see the stock again moved a little bit up, that is a retracement happened, and then again it started coming down. So this candle is a breakdown candle. Now though the volume is less over here for this candle, but it is more than the previous volume. So even though the volume is less, you have to just make sure that the volume of that particular candle is more than the previous candle volume. That is all is needed. So your entry will be just below this candle. Stop loss will be above the high of this candle. Target will be 1:2 RR or previous swing low. Here again you see Tata Steel, high, low. I have taken all of these very recent charts. These are not charts which are taken from the long back. These are all recent charts. You will find this every day actually in most of the stocks. In all the trendy stocks you can find such entries, but catching this entry is more important. High, low, lower high, lower low, and a breakdown with adequate volume. So entry below the low of this candle, stop loss above the high of this candle, and target based on your RR or previous swing low. Now here if you observe, If you exit at 1:1 RR, then it is fine. As I told, if you want to play very safe, then you can exit half quantity in 1:1 RR and then look for 1:2 RR. So if you do that, then you'll be safe over here. Otherwise, here your stop loss will get hit. So we cannot do anything. Sometimes we have to respect the losses as well. So in this case, your stop loss get hit over here. But what you can do is, when you see that after this continuously 2 green candles are formed, you can exit also. If you want to play very safe, here when continuously 3 green candles are formed, you can exit at cost. But you can see here that the loss that you make, even though the stop loss hit, is very less, because your stop loss will be just above the high of this candle. So the points that you lose over here is somewhere around 2 to 3 points. But if you make the profits in this strategy, you will make very good points out of it. Now this was not a complete bad entry, because you can see the stock definitely fell after that, but it just took a retracement over here and then it started falling. So sometimes this happens, we cannot predict everything. So you have to respect the losses, which happen sometimes. Any strategy is considered to be a good strategy when the loss that you will have to take when the strategy does not work should be very minimum, and the profit that you can make when the strategy works out should be lot more than the loss that you take. Then you can call it as a good strategy, because no strategy will work 100%. That is, it will not work all the times. Sometimes losses occur, but make sure that your strategy will help you in minimizing the loss and maximizing your profit. Let's check out one more. Here you can see these touches are called the support levels. Okay, you can see the stock is moving continuously until this level, support level, and again moving upwards. That is, the buyers are not letting the stock to come below this support level. Everywhere you can see, the moment the stock comes to this level, buyers are taking it upwards. There are good demand over here. That's why the stock is not falling below this level. So even though the stock just falls below this level, buyers will come and take it up. So always before taking the trade, you have to confirm the trend. So when these type of movements are found and you get a very good support, you have to check if there is a confirmation of downtrend or uptrend. In this case, you can see here you will get a confirmation for downtrend, but you will not get a breakdown, because again stock will go up, because buyers have the moment the stock crossed this support level, buyers came and took it up. But after certain time, that is when the stock again crossed this support level, then the stock continuously started falling down. So here you got a proper breakdown again. So this is high, this is low, this is lower high, this is lower low, and your breakdown candle comes here. This trend line is broken, and this is a breakdown candle with adequate volume. Next, see, these type of movements are very difficult to catch. Now here itself there is a price action just in these 2 candles. Here there is a big fall, and then here itself you have a swing. Finding these type of movements is very difficult for a beginner. The moment you start reading lots of candles, you will be able to catch these type of movements. Here you can see it is high, it is low, it is lower high, lower low, and here you got a breakdown, and this is a breakdown candle with good volume. Now that you are a price action trader, you should be able to read this chart properly. Now if you are a normal trader, what you will think, here the stock started moving up, so you will think that the stock is making an uptrend or is bullish, and you will take the trade. But being a price action trader, you will be able to catch this point wherein the downtrend is confirmed, and you will look for breakdown and not break out. So here you will find the breakdown. If you could read this particular movement, then you can catch easily this breakdown. Here again you can see high, low, lower high, lower low, again lower high and lower low. So downtrend is confirmed over here. Though the stock became range bound for some time. Here you got a confirmation that it is a downtrend. So check if you can get a very good breakdown. Easily you can make out this point if you could read this position. If you could confirm the downtrend over here, then easily you can catch this breakdown. So here breakdown along with volume confirmation, and you can see after this the stock fell drastically. Here it is high, low, lower high, lower low, again lower high, lower low. But before that, if you draw the trend line over here, this will be the breakdown candle. Again, volume is equal, previous candle and this candle. So if you are a very safe player, you will not take this trade because you have almost equal volume. But again, as I told, many a times these type of candles work. Even though the volume is equal, you will get a very good trade. So your entry will be just below the low of this candle. Stop loss will be just above this candle. Here if you see, your stop loss got hit in this green candle. So sometimes what happens is, though you got a good confirmation, as I said, a strategy will not work 100%, right? So here your stop loss got hit, but the downtrend is confirmed because we got here itself it got confirmed high, low, lower high, lower low, and again here lower high, lower low is formed. So trend is confirmed, but the place where we took the trade was wrong. So you can again check if you get a proper breakdown. You can see after some time we got a proper breakdown over here. Trend is confirmed, you got a proper breakdown, so you can again re-enter. Here the volume is also good compared to the previous candle. So this can be a very good trade, and you can see after taking this trade the stock just fell drastically. So sometimes you have to respect the losses also, and many a times after taking that losses you will get a good trade in the same stock. Let's check one last example in this. Here you can see it is low, high, higher low, higher high, then this breakout. You can see there is adequate touches. As I told, your trend line can cross the wick. There is no issue. You can just go on touching this wick. If the wick goes above this trend line, that is fine. But make sure that the body of the candle does not completely go away. Only if this upper part is touched, that is fine. So this gives you a proper breakout along with volume. So entry will be above this candle. Stop loss will be just below the low of this candle. Your target will be previous swing high, or you can keep it at 1:2 RR. In this case you might say here only higher low is formed, but you can see another higher high is not found over here because this candle didn't cross this high. So higher high is not formed. That's why you cannot consider this. Instead, from here only you have to search for the breakout. Next, let's see what is Fibonacci. This is one of the important term, one of the very useful indicator that is used for analysis. It is available in almost all the portals, Fibonacci retracement. So Fibonacci is nothing but it will measure the current swing and will give you the forecast of the next swing. That is, it will tell you the level at which the retracement might happen. Okay, so there are Fibonacci levels. These are few numbers, okay, which will exactly tell you which is the level at which the stock retraced and which level is favorable, where you can take the trade, which level is to be avoided. So if it is uptrend, then it will give you support levels. For downtrend, it will give you resistance levels. See, now if a stock or index is showing uptrend, then you have to draw Fibonacci from below. Okay, Fibonacci indicator is available. You have to draw it from below to above like this. If it is uptrend, that is bullish approach, you will get these levels, that is 0.236, 0.382, 0.50 and 0.618. So here the stock might come here and retrace like this. Okay, now it's not required that the stock has to touch this support line. Okay, it can come somewhere near like this and retrace here, or it can retrace here, or here, somewhere here. It may touch or it may not touch these support lines, but it can retrace anywhere between these lines. Okay, so if stock retraces somewhere here, that is at 0.236 level or at 0.50 level, then it is considered to be healthy retracement. You can consider these retracement to be safer retracements and you can carry out your trade. If the stock retraces somewhere at 0.382 and 0.618, then it's better to avoid that trade, because 0.618, it is a very risky retracement, because most of the time trend reversals happen over here. So always consider 0.236 and 0.50 to be healthy and take your trade. Now, if you are looking for downtrend, then you should draw Fibonacci from above to below like this. Okay, so you will have these levels, and here again if the stock retraces somewhere here like this, it need not touch the line again, somewhere nearer if it retraces at 0.236 or 0.50, it is healthy retracement. You can consider trading at these levels. If the stock retraces at 0.382 or 0.618, please avoid trading. At 0.618, chances of trend reversal is more. It is very riskier, so please avoid. So this is how you have to use Fibonacci. It is always advisable to use this Fibonacci, because it's a wonderful indicator and most of the time it gives tremendous results. Now let's check out some important patterns. Okay, and most importantly, in the session I will speak about applying price action on these patterns. Now all of you are aware of different patterns that are available, different patterns that are formed, but the interesting part is when you apply price action on these patterns, the results that you can get is very wonderful. Okay, it works wonderfully when you apply price action on the patterns. So first let's see channel pattern. What is this channel pattern? There has to be a pattern like this, okay, wherein you will have 1, 2, 3, 4, 5, okay, 5 points, and these points should touch the trend lines like this. It has to move in a channel itself. If there is any missing touches, then you cannot consider it to be a channel pattern. So in channel pattern, you have uptrend, it looks something like this, downtrend if it is like this, and sideways like this. Now where can you apply price action strategy? Under this channel pattern at this point 5, if you find reversal patterns as we discussed before, you can apply this strategy 1. Okay, if it is an uptrend, then reversal pattern should be there here at point 5. This has to be bullish reversal pattern, and if it is downtrend, then bearish reversal pattern. If it is sideways, you have to see what is a pattern that is coming here, what type of reversal pattern it is, bullish or bearish, and then apply this strategy. But it is better to avoid when it is in sideways, because the chances of stop loss hit is more in this case. So when it is in uptrend or downtrend channel pattern, you can apply strategy 1. So the next here you can see at point 5 this reversal pattern is to be formed. Then you can apply your strategy 1. Here target will be previous swing high. I think I missed telling what is a target in strategy 1. Similar to strategy 2, in strategy 1 also the target will be your previous swing high. Okay, there again you have to check the RR ratio. If RR ratio is good, that is fine. If RR ratio is not supporting, then you can consider increasing or decreasing the target based on RR. Next pattern is head and shoulder pattern. What is it all about? You have two types in head and shoulder pattern, that is bullish head and shoulder and bearish head and shoulder. As the name itself suggests, this pattern will have one head and two shoulders. Now if you are talking about bullish head and shoulder, then it should look something like this. So you can see this is head, which is longer, and your right shoulder should be higher than the left shoulder. Okay, right shoulder should always be higher than left shoulder. If left and right shoulders are equal, then we don't consider it to be head and shoulder pattern. Okay, for this strategy to work, always right side should be higher than the left side. So you should also have, when you draw this trend line, you should have all these points touching this trend line. Okay, all these points here you can see, 1, 2, 3, 4. All these 4 points should touch the trend line. Then your entry will be here, right, with volume confirmation, that is your strategy 2 will work here. Enter with volume confirmation. Stop loss is here, that is bottom of the right shoulder, and your target will be size of this head. Okay, this is a normal way of trading, that is if you are not using price action, then this will be your entry point, this will be the stop loss, this will be the target, right? Now let's see what happens if we apply price action on this pattern. So when you apply price action on this pattern, what we do is we will check the breakout here itself. First trend confirmation is important. After that, if you get the breakout here, then this candle itself will be your entry candle. Also volume confirmation is very important. What happens now is your entry point will be here, right? Entry with volume confirmation. Stop loss will be just below this candle. Now target, what you can do is you can keep this as a target for half quantity. This is where other traders, that is those who don't use price action, will enter. So here you can book half of your profits by exiting half quantity, and for the remaining half quantity you can keep this head size. This will minimize your risk. By doing this half quantity setup, this will minimize your risk, and also when compared to other traders, that is non-price action traders, you will be making double profits. Okay, because the normal traders, that is the traders who are not using price action, will enter somewhere here, but you will enter before that, much before that, and your profit will be from here to here for half quantity and from here to here for the rest of the half quantity. So similarly, if it is a bearish head and shoulder, you can see right side is higher than the left side and there has to be a head. Your entry will be at this point. Okay, when the trend line touches all these points, at this point will be your entry with volume confirmation. This will be the stop loss. Okay, that is the high of this right shoulder, and this size, the head size, will be the target if you are a non-price action trader. Now if you apply price action over here, you will draw the trend line over here and you will get a breakdown here. So you will be entering much before non-price action traders enter. So your entry point will be here with volume confirmation. Stop loss will be here, okay, the high of this candle, and half quantity exit at this point to be on the safer side, and the rest of the half quantity you can keep this head size. Okay, hope this is clear. So the advantage of using price action on this head and shoulder pattern is that you will make a profit much more than the non-price action trader. You can increase your profits and you can decrease or minimize your loss as well. The next pattern is flag pattern. In that again two types. We have bullish flag pattern and bearish flag pattern. So here you can see it looks something like a flag, right? For bullish flag pattern, you should again have this confirmation, that is low, high, higher low, higher high. Then you can say stock is making uptrend. Then there has to be a pole. Now this pole can be formed either by a single candle or by many candles, but make sure that between these candles there should not be any swing. Okay, if there is any swing, then it cannot be considered as a pole. So to be considered as a pole, there should not be any swings in between this. So once this pole is formed, there has to be a downward narrow range, okay, like this. Now if the stock is moving somewhere like this upwards or somewhere straight like this, then you cannot consider it to be a flag. So it has to move like this downward, and the range should be narrow. Okay, a wide range cannot be considered, narrow range should be there. Then when you draw the line like this, trend line, you should get this breakout. So entry will be above this candle, high. Stop loss will be just below this candle. Your target will be this pole size. Okay, this pole size will be the target. So what are the points to be noted? Pole is to be formed. Pole can be formed by one single candle or by many candles without swings. Then there has to be a downward narrow range. Okay, then this breakout, that is when you draw this trend line, okay, this candle will be considered as a breakout candle. Your entry will be above this and stop loss will be below the low of this candle. Target will be this pole size. Next, moving to bearish flag pattern. Here you should have high, low, lower high, lower low. Then a pole is to be formed by a single candle or by many number of candles without swings. Then this has to be upward narrow range. Okay, now if it is downward or sideways, you cannot treat it as a flag. It has to be downward range and it has to have a narrow range. Then this, when you draw this trend line, okay, this candle is a breakdown candle, so entry will be here. Again, as per strategy 2, that is with volume conformation, please make a note of it. Strategy 2 is to be applied here along with volume conformation. Stop loss will be above this candle and target will be this pole size. Okay, so this is again a flag pattern. You'll get it almost many times. Okay, this pattern is very familiar. Next is cup and handle pattern. This is a comparatively very rare pattern. You cannot find it every time. Okay, so here you'll find a cup like this, then there will be a handle like this. Now this handle should be narrow range. Again wide range is not considered as a handle. To be a proper candle, proper handle, it should be narrow range. Okay, so this is a breakout. You can see here breakout, right? The candle will be moving between this, and when there is a breakout, when a candle moves out of this range, it becomes a breakout candle. Entry will be here, stop loss will be here, target will be this cup size itself. Okay, what is the size of this cup? That will be the target just by keeping a buffer. Now when you apply strategy 2 over here, your risk can be minimized by exiting half quantity as per strategy 2. That is, here itself you can just check what is the previous swing high, and that you can set as target for half quantity, and for the rest half quantity you can keep this cup size. Okay, so that is up to you how you manage it. But if you want to minimize the risk, you can keep somewhere target here itself, that is the previous swing high. You have to see where is it and just keep the target. Again, make sure that RR is met. The next pattern is double bottom pattern. This one, see how is the pattern? It is like this. Okay, now if you get a pattern something like, see, if you see a pattern something like this, okay, with the same bottom, or something like this with like this, okay, these are not considered to be a proper setup. Okay, we trade only on such patterns wherein the first this one, what you can see, no, this is coming below and the second swing is slightly above this. Okay, only this pattern is considered as double bottom by us, because only this pattern works more. These patterns will not always give you the good results, so please be careful while selecting the pattern. So here you can see it looks like a W. So double bottom pattern, when you draw the trend line like this, this should have these 3 touches, and when a candle breaks this, it becomes a breakout candle. Your entry will be as per strategy 2 with the volume conformation above this candle. Stop loss will be below the low of this candle. Target will be previous swing high, that is as per your strategy 2. Similarly, we have double top. Here again the pattern should look exactly like this. Both swings cannot be equal. If they are equal, then that is not considered to be a proper setup. The first swing should be little higher, the second swing should be little lower. Then when you draw this trend line, the candle which breaks will be the breakdown candle which breaks this trend line. There has to be proper touches also, make sure. Now your entry will be below this candle, stop loss will be above this candle, and previous swing low will be the target. Let's check out some examples for patterns. I'll show some patterns, rest you will have to do it as your homework. The first example is for a channel pattern. You can see over here the channel pattern is formed, that is this is a resistance line, this is a support line. You can see that the stock is traveling in the same in between the resistance and support line for a long time. Now if we take this point as 1, this is 2, this is 3 and this is 4. Always a rally from 4 to 5 and 5 to 6 is considered to be the safest. So if you are looking for an opportunity over here, if you are looking for a buying opportunity, at this point you have to see if strategy 1 can be applied. You have to see the type of the candle formed. If you find a reversal pattern, then you can take the trade as per strategy 1. That is from 4 to 5 your buying opportunity. Similarly from 5 to 6 you will get a shorting opportunity here. So if you get a proper candle pattern here, then you can apply strategy 1 and take the trade here. If you check this example, again a channel pattern is formed, right? You can see that the stock is in the same zone for a long time. From this also you can consider, actually here I missed this line. So if you consider this point as 1, 2, 3, 4, then 4 to 5, 5 to 6. This area is safer for trading. After that also you might get good opportunities, but to be on the safer side, 4 to 5, 5 to 6 is the strongest place where you can look for buying or selling opportunity based on strategy 1. After that you have to just keep a watch if the stock moves out of this zone. So if the stock moves out of the zone from the upper side, and if you find a good price action here, that is when you apply strategy 2, if your uptrend is confirmed over here and if volume confirmation is also obtained, getting a good breakout, then as soon as the stock moves out of this zone, you can go for buying. Similarly, if the stock comes down, say it crosses this level, this support level, then here you can just confirm if it is a downtrend, and if your strategy 2 can be applied there, that is if you get a proper volume, then you can go for shorting. So at 4, 5 these points you can look for strategy 1 if it works or not, and in these points when the stock comes out of this zone, you can look for strategy 2 opportunities. Next, let's also check another pattern, that is head and shoulder. This is inverted head and shoulder pattern. You can see the left shoulder is lower than the higher shoulder. So this is a perfect inverted head and shoulder. So if you are a normal trader, where will you take the trade? Your entry point will be here if you are a normal trader. Now since you are a price action trader, in this pattern itself you will check for the trend. Here you can see low, high, higher low and higher high is formed, and here you got a breakout. Now if this candle has adequate volume, then you can look for buying over here. Sometimes before this, somewhere here only you will get a good opportunity, then that is also a very good trade. Now you can note that before a normal trader, that is or a beginner entering into this trade, you will already book some profits. So either you can exit half quantity over here to be on the safer side, and then you can go for 1:2 ratio, or you can go on trailing the stop loss or anything as per your strategy. Let's see an example for head and shoulder pattern. The previous one was inverted head and shoulder. This is the normal head and shoulder pattern. You can see here the left side is higher than the right side, and this is a head. You can see that if you are a normal trader, that is other than a price action trader, then you will trade at this point, right? That is when there are 3 touches here, you will take the trade, you will short. But if you are a price action trader, here itself you can know the trend, that is high, low, lower high, lower low, and here is a breakdown. You can see this candle gave you the breakdown, and you can apply your strategy 2. You confirm the volume and then take the trade. You can see that the stock continuously fell over here. Next example, let's see for double top. As I said, double top you have to consider only when the left side is higher than the right side. If both of them are equal, usually normal traders will take the trade when both the sides are equal, but that will not give you good results. Only take the trade when left side is higher than the right side. Here you can see that the trend is formed, downtrend is formed over here. Here you got the breakdown, that is support, support and support. Here this red candle is a confirmation candle. You can enter just below this candle, and stop loss is just above the high of this candle. In this case, we are not waiting for the retracement, that is for double top pattern. We are not waiting for the retracement. Once the trend is confirmed, we'll just draw this trend line, and if we have proper touches, then we'll be taking the trade. Here you can see this is high, low, this is lower high, this is lower low. Here itself you got a breakdown. So this is a confirmation candle. You can apply strategy 2 after getting the volume confirmation. Then you can see the stock fell down. Let's check another example. This is double bottom. This is double bottom pattern. Here you can check that the left side is lower than the right side. You can see there is adequate touches, 3 touches. From here if you check, uptrend is confirmed, that is low, high, higher low, higher high. And here this touches, where this trend line touches, there you will get a proper breakout. So this candle is a breakout candle. Confirm the volume, apply strategy 2. You can see the stock moved up to some extent, around 1:2 RR is met over here, and then again stock started falling down. But this is a point where we take the trade. You will get a good profit over here. So these are the patterns which we just looked at. Now let us just do a quick revision. The first thing is trend identification, which is very much required for price action. The next thing what we learned is how to apply strategy 1 and strategy 2. For strategy 1, if you're going for buying, uptrend should be there, support should be there, trend reversal pattern should be there. If you're going for downtrend, that is selling, then downtrend, resistance plus trend reversal should be there. Now strategy 1 is rarely found. You can apply strategy 1 when you are working for 30 minutes or more than that. Strategy 2 you will find every time, everywhere, which is more likely to occur. So if you are going for buying opportunity, then uptrend plus breakout with touches plus volume. If you are going for selling opportunity, then downtrend plus breakdown with touches plus volume. The next thing that we touched upon is Fibonacci. What is Fibonacci? How it works? How it works when it is uptrend, how it works when it is downtrend. Then price action on patterns. We already are aware about many patterns. Now how can we apply this price action on patterns is what we dealt in this portion. So hope this session was helpful for you. Now there is always scope for improvisation. I just gave you the basics of price action, how it works and how can you apply this price action. Now you can apply some of your strategy also upon this price action to obtain additional confirmation. There is always scope for improvisation. Only practice makes perfect. Now once you master this, just try paper trading for a very short period of time again, because paper trading does not give out emotions in you. Okay, you will not exactly feel what is trade, how is it done. So you do paper trading for a shorter period of time, do some back test, and then start with very minimum quantity. Very minimum quantity. When I say very minimum quantity, it can be even 5. Okay, 5 quantity. So start with minimum quantity, then only you will get to know the emotions behind it, how it feels when you lose money or how it feels when you make profits. So that you will apply the strategy in a more precise way. So don't lose money just because of wrong entries, just because of wrong breakouts. Just analyze properly, do the trading yourself without depending upon the third party tips or third party calls. So hope this video was helpful. My objective of this video is just to make retail traders trade independently without depending upon any others. So hope this video was helpful. Once again, thank you and happy trading.